Okay, and welcome back, students who are taking Math for Business and Finance and Math Applications, and we're doing the Chapter 16 drill problems, the odd number problems, and we were working on the problem 16-7, which required an income statement and a balance sheet, a comparative analysis of both. In the last video, we did the income statement, and in this video, we are going to do the balance sheet. And for the balance sheet, we're looking at a horizontal analysis here. And to do that, it's a matter of, what your base percentage is. Okay. Well, because we're only, notice the way that this here form is set up, so it makes it a little bit easier to understand. When we're looking at 2015, we're only looking at the amounts in 2015 going down the page. And when we're looking at 2014, the same thing. We're only concerned with those numbers for 2014. We're not crossing between 2014 and 2015. Now the next question becomes, well, how do we know what our base percentage is? What's going to go in the denominator? And remember, on the balance sheet, assets is equal to liabilities plus owner's equity. Okay, so it makes sense that our assets, total assets, should be 100%, and our total liabilities plus equity should be 100%. So that's what we're going to use for those bases. Okay. So with that said, if we're saying our total assets of 89,000 is 100%, because 89,000 divided by 89,000 is 100%, that's 100%. And the same thing down here for the total liabilities and stockholders' equity. That should be 100%. And that goes for both years. 65,500 divided by 65,500 is 100%. Okay. Now, all it is it's a matter of taking whatever number you're looking at and dividing it by that 89,000, or the total asset. So if I have 12,000 and I divide that by 89,000, okay, I end up with, let's see here, 12 divided by 89, I end up with 0.13483, and we're rounding to the nearest 100%, so that's 13.48 because we're rounding down. Okay, so let me do that again, because I'm not going to do this for each and every one of these numbers. Okay, I'm going to take, when we're looking at cash and we want to know what our cash percentage is, okay, we're going to take our 12,000 and we're going to divide it by our base of 89,000. And when we divide, we end up with 0.13483, and we're rounding to the nearest 100th percent. So I end up with 13.48 because I'm rounding down. So this is 13.48%. Okay. Now, as you saw, I left that denominator. Why? Because at each one of these numbers, I'm going to divide it by that 89,000. So for accounts receivable, I have 16,500. So 16,500 divided by 89,000 gives me 0.18539. So I move it over. That's 18.5, and I'm going to round up because the 9, I'm rounding up to the 100th of a percent. So I have 18.54 for the 16.5. Okay, so I'm not going to do the math here for all of these, okay, because it's really just that simple, and all you're doing is just kind of like going down the page. Okay, so I'm just going to put in the numbers. So this 8,500 is 9.55. The 24,000 is 26.97. and the 61,000 is 68.54. Okay, make sure you put your underlines, because remember from the previous chapter when we had talked about amounts and percents having that relationship. Okay, well, if I have 100,000 less 20,000 gives me a profit of, say, 80,000, right, in dollars. Well, that's 100%. 20% of that is, 20,000 divided by 100,000 is 20%. And I have an underline, that's 80%. I'm still doing the same mathematical operators, right? 100% less 20% gives me 80%. Well, as I'm doing this, I still need, because I should be able to add 1348, 1854, 955, and 2697 and get 6854. Okay, so I hope you understood that. I mean, this is one of these kinds of things where you have to understand the underlying concept, but and if you understand it, that's great, but doing the work is really just drudgery work. I mean, because it's just crunching numbers, okay? But remember, you're keeping it in the back of your head in order to be able to find whenever you make a mistake. You might see where you make a mistake because you understand the underlying concepts, okay? So for on 14,500, it's 16.29%. 13.5 is 15.17. On a 28,000, it's 31.64. I'm sorry, 31.46. Draw an underline, and that's 100%, and that gets a double underline just like that right there. Okay. All right, so let me just run the numbers down the page. 1461, 787, 2247. Okay. And realize that you're going to have some rounding issues here. Okay. But everything should tie out. So if you're off by a penny somewhere and you need to fudge it in order, because of it's due to rounding, then you fudge it. Okay, you round up or round down as required. Okay, so this is 2360, 2921. Draw an underline there. 5281. Draw an underline there. And that gives me 100% right there, and that gets a double underline because that's my total liabilities and owner's equity. And that's strictly for 2015. Now when we do 2014, and I'm just going to write, so don't mind the silence here. I'm just going to write and get these down. So 1908, 2137, 1527, underline, 6947, again an opportunity for rounding there. 1679, 1374, underline, that's 3053, and that should give me 100% because of total assets. So then I have 1069, 763, 1832, 3130, underline, 4962, underline, 3206, 1832, underline, 5038, erase that, underline, and 100 there. Double underline showing the end of the calculation. Okay, so now you've just watched me do this math down the page, and hopefully you can you saw that when we're doing the vertical analysis, it's all based upon what is in that particular column that for that year. Okay, And then you got that idea because you saw me do 2015, and then you saw me do 2014. And that's just the crunching of the numbers. But what does this mean? Well, you're doing comparative analysis. Okay. So the intent for doing this is to take, and you're comparing 2014 with 2015, and you're looking at the figures in each of the columns in relation to each other. Meaning, let's just take accounts receivable here. Back in 2014, my accounts receivable was greater than it was in 2015. It was 19.08% versus 18.54%. Okay. That's down 0.5%, meaning, that's not much, but that means we actually collected more of our accounts receivable than we did the previous year. People paid us. In merchandise inventory, that's a pretty big percentage here, in that we had 21% in inventory, and in 2015 we only had 10%. That's half. So basically that kind of like tells me, okay, we sold off our inventory, and two things: either we sold off our inventory and didn't replace it, okay, or we were replacing it and we sold a lot more, and we're not going to be able to determine that from the balance sheet. We have to actually look at the income statement to see what happened to our net sales, whether we did have that extra bump in sales, even though we kept our inventory level the same. But that's in comparison here, that's a pretty big difference between the two. Okay, that's something to make of note. And when we look at our prepaid expenses, again, there's a big jump. In 2015, for the same time frame, my prepaid expenses is approximately 75% more. Okay, why was that? All right. Did I have additional prepaid expenses? Maybe I took on like prepaid advertising. Okay. And maybe in 2014 all I had was just prepaid rent. Well, in 2015, do I have prepaid rent and prepaid advertising? Or maybe I had prepaid insurance, but no matter what it is, my prepaids went up, and that's something to make note. So that's what that's the whole intent and purpose of doing the comparative analysis in a vertical format, so that you can compare year over year, all right, and think about what those numbers mean, and what why they are what they are. And of course that alerts you to certain issues, and that allows you to be able to take preemptive actions on certain things, like that prepaid expense. If I'm aware of what that's for, then I can make a judgment as to whether that's okay or not okay. The thought just also occurred to me that when you're an investor, okay, and you're not working in the business, or let's say, let's take it like this: if I'm a small business owner, okay, and I only have a few employees, most likely I know what's happening with that prepaid expense. I know that I took on prepaid insurance or prepaid advertising, and so when I'm looking at the difference here, immediately I can say to myself, okay, I understand that. But what happens if you're an investor, okay, or you have a lot of different businesses? Let's say you own 10 convenience stores, okay, like your 7-Elevens or something like that, right? You can't micromanage. You're not micromanaging each and every store. You're getting a balance sheet, and when you're going through here, you see this difference, and that's going to raise a flag for you to, ask one of your managers, because you're not managing all 10 of those stores. You have managers managing those 10 stores. You're managing the managers, and this goes back to this idea of financial accounting. It's a report card for the business. When you're at that higher level, Donald Trump does not, talk to, every property manager for every property that he has. No, all of that information gets funneled up. He looks at, For him, it would be a consolidated, consolidated balance sheet and consolidated income statement, meaning all of his businesses, his enterprises, all of the numbers merge together. And then he goes and he says, "Okay, George," I forget his last name. From if you had seen the movie The Apprentice, George was like his right hand man. He would go to George and say, "Hey, George, what?" And of course, George looked at these two and he already knows what the answer is. But Donald is going to go to George and say, "George, how come this is up?" And George better have an answer. If George doesn't have an answer, he doesn't have a job. Okay. But that's how you use your balance sheet and your income statement in comparison purposes, right? So, yeah, I can start going into a lot more detail about it, but I'm going to, stop here because we're talking about high level. And like I said, this is just stuff that's, coming out, thinking in the back of my head as to why you're doing what you're doing instead of just crunching all of the numbers and going, well, I didn't really learn anything except how to add and subtract. Okay. So with that said, I'm going to stop here and we'll hopefully finish off with these drill problems in the next video.